Good afternoon, this is Sean Golding with Golding & Golding, here to answer the age-old question of whether you file the FBAR, the Form 8938 FATCA, both or neither. The FBAR is used to report foreign bank and financial accounts. Bank accounts, investment accounts, dormant accounts, accounts where no income was generated, accounts that you owned before you became a U.S. person, all of those types of accounts. For example, if you own a stock certificate, you individually own it, not reportable. If you own a stock account, reportable. You file the FBAR when you have more than $10,000 in annual aggregate total each year. So if you have one account with $15,000, 8 accounts with $2,500 each in the accounts, you exceed the threshold, you file the FBAR. It doesn't have to be $10,000 per account. It's due on April 15th, but it's on automatic extension to October. Form 8938, and the FBAR has been around for like 50 years. Enforcement's only become more recent the last 10 or so years, but it's been around since the 70s. Form 8938 is a relative newcomer to the world of international tax. It was first introduced in 2012 on the 2011 tax return. Unlike the FBAR, there is varying thresholds depending on whether you're a U.S. Resident or if you're a foreign resident. If you're filing joint or if you're filing single or separate, it's as low as $50,000 if you're single filing in the U.S., as high as $600,000 if you're married filing joint, filing overseas. Now, there may be some crossover, but the form is not identical. For example, a bank account is going to be reported on both, stock certificate on the Form 8938, not the FBAR. If you do not have financial interest in the account, you don't have to report it for the 8938, but you do have to report it for FBAR. So you can just have signature authority, maybe through an employer. Your sweet grandma trusts you the most and decided to give you signature authority on her foreign accounts overseas. FBAR is required if you're a U.S. person, whether or not you file a tax return. Form 8938 is only required if you have to file a tax return. In other words, if you earn no income but you have gazillion dollars in foreign accounts and assets, you don't have to file a return just to file the 8938 because you otherwise met the threshold. You file both when the threshold is met for both, and it's the type of asset that is required for both. One thing to keep in mind is if you make a treaty election to be treated as a non-resident alien with 8833, then you may not have to do a tax return. 1040 means you wouldn't have to do an 8938. Now, you may take the position you don't have to do the FBAR as well. IRS says you have to do it. In the case of ROS Day, the court said, no, you don't have to do it. But the IRS still takes the position that you do, so it's something to keep in mind. If you're out of compliance, we have a ton of free information on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.